Hello and welcome to Pro Trader Strategies market commentary for Thursday, July the 30th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes and impacts the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I go a bit further and talk about option strategies, how we can implement those into our portfolios in order to increase that overall yield that you can get by trading options. You can use a little bit less margin and increase your probabilities of success with option strategies. So without further ado, let's get on with the economic data. Across the pond, not really a whole lot to see here. We did get the European unemployment rate coming in at 7.8%, an uptick slightly from 7.7%. Then we move back here quickly to the United States, and we got advanced GDP coming in at negative 32.9%, expected to be a negative 34%. So obviously better, but it is still a negative number, which is not good for an overall economic recovery, to be quite honest. And then we also got the advanced GDP price index. Was expected to be unchanged, came in at negative 1.8%, which is, the cost of goods and services. That's actually, in my eyes, a good thing, because right now we don't want to see higher prices, right? And that being said, the economists are going to look at that as a bad thing because there is no price demand, which means there's no demand for these goods and services, and then therefore that if there is that demand, those prices start going as free market price discovery and more buyers and then sellers come into the market. That shows demand and should increase prices. But right now, when we're trying to roll out of this pandemic, I don't think that we really want to see prices spiking. Unemployment claims coming in better than expected at 1,434,000 jobless claims, and that was better than the unemployment claims, and that was better than the expected 1,440,000. Still very tough to throw out that million marker out in front of the unemployment claims and non-farm payrolls, as that is just an astronomical number. Usually we would be talking about up just the 400,000 being a big number, but now we've got the 1 million marker in front of that. All right, natural gas storage is expected to be 25 billion cubic feet, coming in at 26 billion cubic feet. So in line with expectations for the most part. So let's get on to the overall markets. We've got crude oil coming off by about $1.39, breaking that psychological level of $40 a barrel. But keep in mind, my Fibonacci is right there at 39.16. I think that is going to be more or less the real line in the sand there. Why? Because for one, it is the Fibonacci. Two, it is lining up with the value area low, which will also act as support. So I'm more concerned about that value area, and now with that Fibonacci lining up against it, that is dually a support level. Keep in mind, we've got that 50-day moving average creeping up and touching on those same 2 points that I just talked about. That all of those things coming together, the real support area, or the area to keep in mind, is $39, not necessarily that 40 handle that is more of a psychological level, to be honest. All right, bonds moving up by 1 point. Obviously, yesterday they didn't increase rates. They didn't even lower rates, but they did talk about keeping interest rates suppressed for the foreseeable future. Right now, pressing up against 182. That is a resistance area that we've seen hold off the market a little bit, that it has acted as resistance. But if they start peeling through that, the real marker is that 183, and we start seeing that momentum start to slow down above 182, and hitting 183 is really where we've seen some major overhead resistance. Something to keep in mind, interest rates are so low right now. That's why we're seeing the housing market do so well. As a matter of fact, I got a friend that's in the mortgage business, and he was talking about 15-year mortgage rates below 2%. So that is just something that many people are taking advantage of. Actually, he said that he has never been busier right now as people are trying to refinance. The big problem is on the bank side, and those guys dragging their feet and causing all kinds of problems that these guys aren't necessarily in the mortgage business accustomed to, with the banks requiring a lot more documentation in this time of massive unemployment and stuff like that. So more difficult to get a loan, but having said that, if you can get that loan, you are getting a very nice interest rate. All right, on to gold futures. They're coming off today after yesterday, trying to test that 2,000 mark. You can see we just came shy of that by about $1.50 there. I thought we were, I was rooting for that 200 or that 2,000 handle, but today just no attempt whatsoever to come after those psychological level of 2,000. I thought it was going to snap above there, but now we're starting to see a little bit of a pullback. It's normal for a bullish market here. We could easily see it even go down and test 1900. I think we will find support at 1923. So keep your eye out for that. We might see a little bit of a bounce there and then resume the upward momentum in gold futures. Remember, if they come through with this stimulus package, we could really see gold start to move a little bit higher there. All right, the VIX is rallying today. We were seeing the equities come off quite dramatically earlier today. We are off the lows. The Dow Jones Industrial Average right back to the point of control and off by about 350 points right now. It was off over 400 at one point in time. NASDAQ, the lagger of all of the equities today, only down about 0.5%, off by 55 points though today, but it is still in that little bit of a pattern there, creating what I've talked about as a head and shoulders. As you can see right here, one shoulder, the head, and building on possibly another shoulder with the neckline drawn in there as well. So we're going to keep an eye on this. Any move above the headline will kind of break that pattern, but right now we've got that head and shoulders happening that is usually a sign for a bearish move ahead. So we could easily see the market come down and test 10,100 and possibly even 10,000 if we start really breaking below that Fibonacci there. All right, E-mini S&Ps off by 1% and 33 points on the day. We had an engulfing candle this morning. Starting to see, like I said, a little bit of a rebound, but when we take a look at the overnight trade, you can see that the market was very bearish. We ended up near the highs of the day yesterday and even pushed further after the reopening. But then just nothing but bearishness in the market overnight. No attempt today to really flush those guys out. As a matter of fact, I don't think that they're going to go and try and rush to the upside. You know, this was more of a profit taking, and this goes back to what I've been talking about for so long, is that we are kind of in the sweet spot right now of where the equities should be. Maybe the NASDAQ would have a little more room to come down. We're seeing more acceleration to the downside in the Dow Jones and the E-mini S&Ps, and I'm expecting to see more acceleration to the downside with the NASDAQ, but it's holding up today, and that's probably ahead of tonight's real tech-heavy earnings. We're getting Google, we're getting EA, Electronic Arts, and Apple. So those are the big juggernauts that have been driving the overall tech sector. If you guys have been watching these daily market commentaries, I've been talking about these guys since the pandemic, that these are going to be best in breed along with Amazon. You know, Thor, I mean, we bought Thor at what, with 38 or something like that. It's trading 110. So, you know, those calls that I made early on at the pandemic back in March, April, those stocks have done very well. Now, having said that, I do believe that those are pricing in a little bit of a frothy forward guidance. So therefore, I do believe that those might have more of a correction. I'm not saying we're going to go down and test those lows again, but what I am saying is that people are going to be antsy to cover profits when they're seeing themselves up maybe 300-400%, right? Okay, so keep your eyes out for that. I still think that that's going to kind of work its way through the system there going forward. And then there was something I wanted to talk about with, I can't think about it, or I can't think what I was looking to talk about for a stock earlier today. But anyway, that's all I got for you guys. Today we're doing a webinar on the poor man's covered call. Great strategy for smaller accounts, newer traders, especially if you're newer to trading options and you're trying to think, okay, you know what? I'm used to trading stocks. I want to start learning a little bit more about how options work. Well, we're going to do that in this webinar for Poor Man's Covered Call. We're going to basically create a long stock position with a collar. And the collar is actually what made Mark Cuban famous with his stock trade. We're going to talk about how to build that out in accordance to my rules. It's not like you're just going out there willy-nilly and picking different calls and puts and just throwing them in the pot and making a poor man's covered call. We're going to look at the internals of what's going on inside of this underline before we make a diagnosis on what type of strategy we're going to implement. All right, so we're going to build it out that way as a roadmap. You know, when we're taking a trip, we know where our destination is, but then we decide how we're going to get there. And that's exactly what we do in these webinars, break it down in layman's terms so that you guys can easily digest it and move forward with trading options. All right, so check that out at protraderstrategies.com. Take a moment, please, to go over our disclaimer, as we are an educational company and nothing I talk about is a solicitation to buy or sell. All right, so if you can't take that, take it easy.